Welcome back to the Digital Asset Report. Crypto is starting the week trying to find its footing amidst big macro events in the Middle East, which saw both oil futures and U.S. Treasury yields rally. Bitcoin rose to the high 60,000s, up 8% from Saturday morning. U.S. spot Bitcoin ETFs pulled in about $1.1 billion over 3 sessions late last week, a turn that suggests the dip is still attracting real money. The most aggressive balance sheet story right now is on Ethereum. Bitcoin Immersion Technology says it now holds 4.47 million ETH plus 195 Bitcoin, with total crypto and cash holdings at roughly $9.9 billion. The company says about 3 million ETH is already staked, and its Ethereum position now represents about 3.7% of total supply. Bitmain's stated goal is to push toward owning 5% of the network while harvesting staking yield along the way.
Have you woken up in the middle of the night and looked at where Ethereum is and said, I can't go back to sleep?
No.
You're not worried yet?
No, because Ethereum, there's the fundamentals, like what's happening. So much is being built on Ethereum now. Almost every major announcement of a tokenized fund is being there.
Does that translate to supply and demand dynamics that make the price go up, though? Or can you just keep building out all these networks at 1900?
That would be like someone saying, all this activity is happening in the United States, but the economy shouldn't boom.
Yeah.
So if it's all taking place on Ethereum, then price follows. But we are in a crypto winter, so price doesn't matter. Capital is looking at gold and silver and ways of hard assets, but that isn't always going to be the case.
I'd read you buying more Ethereum on the dip. How much more, and does that continue today?
Yes, Bitmain's been buying about $50,000 or about $100 million of Ethereum every week, but the cash balance has grown to over $800 million, so it's able to, at the right moment, make a major buy of Ethereum. So I think we're getting ready for the crypto bottom. But we're still buying about $100 million a week.
That corporate accumulation is landing as the stablecoin rails face a renewed credibility test. Tether says it has frozen about $4.2 billion of USDT tied to illicit activity, including roughly $3.5 billion frozen since 2023. The company also pointed to recent cooperation with law enforcement, including the freezing of funds linked to pig butchering scams. The biggest stablecoin issuer can act like an enforcement switch when regulators call. Meanwhile, Europe is trying to build its own regulated counterweight to dollar stablecoin dominance. The Quivalis Consortium, a group of 12 major EU banks, is reportedly in talks with crypto exchanges and liquidity partners ahead of a euro-peg stablecoin expected in the second half of 2026. The plan being discussed is one-to-one backing with a meaningful portion of reserves held in bank deposits and the remainder in high-quality Eurozone sovereign bonds, built for 24/7 redemption under MiCA. Switzerland is showing up in this story too through the private sector. Allunity has launched a Swiss franc stablecoin, CHFAU, on Ethereum, positioned as MiCA-compliant and aimed at corporate and institutional payments, settlement, and treasury use. The bigger picture is that stablecoins are moving from a single currency tool into a multi-currency settlement layer that institutions can actually integrate. On the regulatory front, Washington is signaling it wants sharper tools. The CFTC has appointed David Miller, a former federal prosecutor and crypto-focused lawyer, as its top enforcement official. The message is not subtle as crypto and prediction markets converge with traditional derivatives. Fraud and market abuse cases are going to stay central here, even as policymakers talk about innovation. One of the more interesting tokenization angles this week is coming from Matador Technologies. The company says it intends to spin out its gold treasury platform, GODL Corp, into a separate public company subject to TSX Venture Exchange approval and other conditions. GODL is being pitched as a yield-generating gold treasury strategy with a tokenization layer, with a mandate to maximize gold ounces per share using physical and tokenized gold. The company will have audited custody and use capital markets financing tools. The takeaway this week is that the market is not just the trading price or the macro backdrop. Crypto companies are funding a new financial stack. ETFs are pulling flows back in, corporate treasuries are concentrating supply on Bitcoin and Ethereum, and stablecoins are being forced into higher standards of compliance and structure. The rails are getting finalized in real time before our eyes. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.